Yeah, what's happening, guys? Welcome to the Brad Penning channel, and today I'm gonna be reacting on a video from Zamusa, Zamusa. Sorry. Please check out his channel, Zamusa Mustafa, and yeah, he's talking about our small businesses over text. I saw this video. I'm like, I'm gonna hold out up until I actually am able to react to it and actually give my thoughts. And yeah, just check out the original video, like and subscribe right there. If see each other in the chat, in the comment section that Brad Planning sent you there. And yeah, hopefully, South African YouTubers supporting one another. So yeah, for me as a business accountant, I just wanted to react to this video and really share my thoughts after a wonderful piece from Zamisa Mustafa. So let's check it out, guys. Let's go.
So here's something interesting. I want us to be honest. Running a small business in South Africa is tough enough without the government taking what it feels more and more like it's their fair share. When you look at the numbers, it becomes crystal clear that South African small businesses are drowning in taxes, fees, and levies. And a lot of that would make even the most seasoned entrepreneur or small business owner think twice about starting a venture in South Africa. Let me actually paint you a sobering picture. Let's say you've built a successful import and distribution business right here in South Africa, and you've got 11.5 million rand in revenue. Here's exactly how the government systematically will strip away your earnings. First, they take 1.5 million rand in VAT, that's value added tax. That's 15% of your invoiced revenue. Then 880,000 rand in import duties, 22% of your 4 million rand cost of sales, followed by 282,000 rand in employee related taxes. Think PAYE, UIF, SDL. Then there's 640,000 rand in fuel levies and road accident fund contributions, and 875,000 rand in operating expenses that include various government fees and levies. Now, after all of these deductions, your business shows a net profit of 1 million rand, but the government isn't finished yet. They take another 280,000 rand in corporate tax, 28%. And if you decide to pay dividends from your remaining 720,000 rand, they're going to grab another 144,000 rand in dividend tax, which is about 20%. Now, when you add up all of these government extractions, VAT at 1.5 million rand, import duties 880,000 rand, employee taxes 289,000 rand, fuel levy 640,000 rand, operating expenses 875,000 rand, corporate tax 280,000 rand, and dividend tax at 144,000 rand. The total that government ends up taking from your small business is a staggering 4.6 million rand of that 11.5 million rand that you started with, that you generated. Meanwhile, you, the entrepreneur who took all the risks, created the jobs, and built the enterprise, are left with 576,000 rand. That means that for every 100 rand that your business generates, the government takes a crushing 40 rand. That's what they get to keep, while you keep just 5 rand in profit. But here's the ultimate aibo. The business owner carries all of the risk. When the market downturns, when the cash flow problems hit, when the equipment fails, well, even when you as a business owner die, the government still imposes a further estate tax and estate duty of around 20% on what little wealth you've managed to accumulate. Meanwhile, the South African government bears absolutely no risk, but they will happily impose fines, penalties, and charge punitive interest rates on any late payments or minor transgressions that you might be involved in. This isn't taxation anymore, at least to me. It feels like systematic wealth confiscation of the highest degree, because to me, it actually punishes the success that an entrepreneur gets while rewarding bureaucratic parasitism. It's honestly gotten that bad, guys. That doesn't.
Yeah, I'm just gonna pause it right there, guys. I feel like he's raising, just from the beginning, he's raising some very valid points. And I mean, I look at this, I've helped thousands of small businesses, and the thing that a lot of people don't understand is what is a small business, right? So according to, yeah, various publications, whether it's the Companies Act or whatever, small business is under is a business that generates revenue of under 20, let's say 25 million rands per year. For many people, that's a lot of money. Looking at his example, that's not a typical small business, but in terms of the definition of a small business, a medium SMME, that's literally at the midpoint. A business that makes 11 million rands, and that's off one transactions or a set of transactions that accumulate to that amount. And really, what I'm trying to say is the levels of perspective are huge, So you could be watching this and you're making 500,000 per year from your business, and you are decently successful. But to be honest, at the level he's talking about, that's where really, really you start seeing how detrimental the South African tax system is. But also for small business in general, we are used to small minded thinking that even the big problems that are existing out there, we're not tackling them. And that's why the government is able to do what they are doing in terms of implementing all of these things. And there's only few players that are actually complaining about these type of things. And once again, I want to congratulate Zamisa about talking about this topic, because it needs to be out there, because the less small businesses are taxed, the better, because they'll be able to have the cash flows to do more impactful things like employing people, which is job creation, keeping their businesses alive, because economic uncertainty is just rife, and that's why small businesses are at the forefront and they get the worst type of impact, because you can't borrow like a big business can. You don't have the facilities, the resources to be able to get cash injections as and when you wish. I mean, as a small business, it's do or die all the time, no matter how successful you are. So looking at this example, whereby you talk about a business that is doing 11 million in revenue, and it's per month or per year, and they're already suffering so much, it creates a very dim picture. But let's continue.
Seem to be a balance in all of this. And I don't know if I'm actually overreacting here.
No, you're
I want
not.
you to let me know in the comments. What are your thoughts around this example that I've just given? Is it too outlandish? Do you have some experience with a business, or do you know someone who's in business? And do you hear their cries? What are some of the cries that they have? Hit us below and let's chat about this. There's more to this. The South African government doesn't just want a piece of your profits, they want a cut of every time you try to create a job. The PAYE, the UIF, and the SDL, that's the Skills Development Levy. All those contributions add up to 289,000 Rand from our business example before. Think about that for a moment. You're trying to do the right thing by employing more South Africans, contributing to job creation, and helping to reduce unemployment. The government's response? Well, thanks. That's gonna be 300,000 Rand for that privilege. Again, I'm not saying businesses shouldn't pay these things. I'm saying that
I should add, at the end of the day, you have what you call the ETI, which is an employment tax incentive. And this tax incentive helps to assist businesses to employ people. However, a lot of people don't know about it because it's a very technical thing to do. You have to have a good payroll system. A lot of clients that we take on, we tend to help them and introduce this thing, and they get pleasantly surprised. However, the main drawback about this ETI system is that government actually, or let me rather say SARS, South African Revenue Service, doesn't actually, you know, play fair when it comes to this, meaning that the minute you miss a certain deadline, the minute you do some sort of error or whatever, it's very easy to forfeit this incentive. And in most cases, from our side or our experiences, we comply with everything, but then they won't pay anything, as they will keep on delaying and delaying up until a certain point in time whereby they actually just end up canceling the whole thing because of EMP 501s that were submitted, but maybe something is incorrect or something is off, or you just missed a deadline. So what I'm trying to say is there's more pressure for you to just comply and do these things, but government themselves doesn't actually follow through and give these incentives to the businesses that deserve them, or trying to claim them at least. So yeah, I mean, it is rather unfair, but there are those things, programs that the South African Revenue Service administrates on behalf of the government, which are incentives to small businesses that are available for businesses to claim, but it is so difficult. And, a lot of bureaucratic reasoning from these governments will say that they have these incentives and they make them available. But what happens is, whereas businesses are supposed to be getting the incentive back in cash per month um, as they submit, they don't. That's the reality. at least from our side, in terms of everything that we've assisted our clients with. And that's really a painful thing to experience on behalf of your clients and for the client in themselves when they look forward to something. So yeah, it's very tough.
That the realities for small businesses no longer fit the current policy environment. All of this starts to create a very perverse incentive where businesses are discouraged from hiring more employees. Why would you expand your workforce when every single new employee comes with a hefty government surcharge? Also, you've got to take into account that the AI revolution and those issues have affected how businesses operate. So, businesses are employing off productivity more than anything else. And if they're disincentivized to get more people working, we're going to have an even bigger problem. The creativity, the pure creativity of the tax authorities in South Africa. They've found new ways to extract more money from businesses, and it's almost like admirable. They're really good at it. If it wasn't so destructive, I would clap. Take, for instance, the fuel levy and the road accident fund contribution. In our business case, that totaled around 640,000 Rand. Now, these aren't just taxes on fuel consumption. They're taxes on doing business. Every delivery truck, every sale, every visit, every business trip becomes a revenue opportunity for the government. The message is pretty clear. If you want to operate a business that requires any form of transportation, you'll pay dearly for it. The other thing that really annoys me is that RAF covers all people that are on our roads. But when we go to other countries, we have to pay public liability insurance to get the pleasure of being on their roads. Honestly, who writes these laws? Generally speaking, I want to know honestly, who still supports the road accident fund in its current form? Maybe I'm in the wrong here. Maybe I'm going left. I want you guys to tell me in the comments below, because I'm honestly a little bit, I don't know if you've noticed, a little bit frustrated. Now, what these figures don't actually show is the hidden cost of compliance. Because that's another thing. Small business owners spend countless hours filling out forms, calculating taxes, and ensuring that they meet all of the various deadlines imposed by different government departments. This time could be spent growing their businesses, creating jobs, or innovating. Instead, it's wasted in bureaucratic box-ticking exercises, which could honestly be done digitally or using AI. The complexity of the tax codes and its system also forces businesses to hire not cheap and mostly expensive tax consultants as well as accountants. And when you add all of this up, this is just another layer of cost that ultimately makes South African businesses less competitive. Shem. Other countries have also shown that. So here's something.
Oh wow, what did I just do? While I try to find where I was, yeah, I have to chime in as an accountant and tax consultant. We're not expensive, right? But I understand his point, being that we are an additional cost. But studying business, having been involved in business for the longest of time, you have to understand that you having an accountant is the same as having a CEO, is the same as having any important key stuff in your business. You need to have an accountant. It's just no other way. You can't avoid that. Unfortunately, it seems like people can, but it is what it is. But that being said, the reason why you need to have an accountant is because you need someone to independently assist you with your finance management, in terms of no added emotional attachments, no biased opinions, and someone that is trained and qualified to be able to assist you. So what I'm saying is, to the tax consultants that cost whatever that they cost, they need to make sense for you as a business to take them on and actually take on their services. So the value must be transmitted, it must be felt, and they must truly help you to extend that you need not to feel any administrative burden when it comes to compliance. They must deal with it, and they must make sure they are on the loop. And also, the reason why you want to do this, get someone that's qualified, is because they have liability insurance. The wrong advices that can impact your business, there's an insurance, professional indemnity insurance, that they will have, that we have as a firm, that if something happens that costs you, your money and whatnot, or creates a liability, we can pay for those damages. So it's very key to really understand what's going on, and not just to criticize. But once again, I appreciate videos like this because they open up everything that can be dissected and be truly scrutinized in order to assess and truly get into that conversation of understanding how business should be working, how administrative business should be. But at the end of the day, the real problem is the government. The government is taking money from everybody, right? Your business must have a tax consultant, must have an accountant. And if you don't have the money to pay for that, it's stealing away from you, it's stealing away from me. Hence, the main problem here is the tax setup that we have. And I'm not going to be just saying that the tax system is all bad. The problem is it has administrative and operational problems. And small businesses, if they don't have the ability to pay for resources to help them, this effect is even has a greater impact on those particular businesses. And that's why employing a tax consultant and a business accountant helps you a lot. It gives you that extra edge, but unfortunately some will charge a lot, and or the services are just not affordable. It is what it is. Everybody charges what they charge for what they say they can do, and it goes down to you as a client. Do you experience the value? Are you asking the right questions to take on that professional? So yeah, it's 50-50. I mean, it's either you agree with what he says or not.
Revolution and those issues have affected how businesses operate. So businesses are employing off productivity more than anything else. And if they're disincentivized to get hours, filling out forms, calculating taxes, and ensuring that they meet all of the expensive tax consultants as well as accountants. And when you add all of this up, this is just another layer of cost that ultimately makes South African businesses less competitive. Shem. Other countries have also shown that much lower tax rates can actually increase total tax revenue by encouraging more business activity. I mean, to me at least. South Africa seems determined to prove the opposite, that you can tax your way to prosperity by squeezing existing small businesses even harder. It doesn't work that way. And if it does, please give me examples down below. The other elephant in the room is that our economy is struggling. We all know that. Because we don't produce anything of value from our raw materials. Thus, we can't really charge more for them when we actually trade them. I mean, this should be one of the easiest options to get more money into the economy. Let's make for export, for trade. Then on top of that, let's give the small businesses the opportunity to do that without taxing them heavily. But also, let's be clear here. We understand that taxation in some shape or form serves as a catalyst for creating the conditions within a country that allow for businesses to flourish. This is very clear because there's a common understanding that when you pay taxes, you're paying for the government to create the infrastructure, maintain the law and order, and make it easier for you to do business. Roads need building. Courts need functioning, and the contracts need enforcing. These are legitimate government services that businesses do benefit from and should contribute towards. This is clear. We're not saying don't pay for this stuff. That's not the real issue here. The issue that is emerging, or perhaps has always been lurking beneath the surface, is that government is now overtaxing those who are creating value while not incentivizing smaller businesses enough to give them the chance and opportunity to grow and employ more people, thus increasing our tax base overall. There's a critical difference between fair contribution and aggressive extraction and taxation. Yes, we do understand that there are people that don't all pay their fair share when it comes to the business community. And that's a reality that must be called out. But then the question is, what is fair for the middle class business owner who's not rich and just getting by? What is a fair tax rate for them? How do you incentivize them to do more, grow their businesses, and thus make the country flourish? The solution isn't rocket science, guys. South Africa needs to recognize that small businesses are the backbone of any healthy economy that wants to absorb people, offer them jobs, and grow. They create jobs, they drive innovation, and they generate tax revenues for the government. Revenue that funds the government services. We've got to work together here. By overtaxing these small businesses, the government is killing the goose that lays the golden eggs. In fact, I'm not even sure if we have any eggs in the basket anymore. What we truly need, is comprehensive tax reform that reduces rates, simplifies compliance, and creates an environment where businesses want to start, grow, and succeed right here in South Africa. Also, we've got to teach kids how to file tax returns in school during life orientation, because that's real life. That's the least that we should be doing. And until that happens,
Yeah, I have to chime in there. So I'm for the revolution of simplifying tax administration, but for the video that is being created here, that's a very misleading point. Even if you were to learn how to submit a tax return, there's a difference between submitting a tax return for an individual, for yourself, and submitting a tax return for your business. And furthermore, business arches into sole proprietor, SMME, medium enterprise, large enterprise, and so on. So, as good as that may be, it helps in terms of understanding the basics, in terms of how SaaS works, in terms of what is the level of engagement that one needs to know from a basic level what SaaS is. And the thing that a lot of people miscalculate is the Tax Administration Act changes literally every year. Also, as accountants, as tax practitioners and so forth, we need to be registered and complete continuous professional development points in order to keep updated to all the changes that keep happening. Yes, we could be fortunate in some cases that the updates to the tax administration are minor or negligible, but when they become complicated, it's not something that at grassroots level you can just simply tweak and teach people. It doesn't work that way. So that's why this point is slightly misleading. But at the end of the day, I agree with the fact that more needs to be taught, because even in university, they don't teach us how to work with SaaS. What are the base? They just show you certain things, and that's that. It's more of like just show, tick, done. Nobody asks questions, nothing, because you can't ask questions over something that you're not aware of, something that you don't know about. But what happens is in practice, you start dealing with these things, and then you get to a point where you actually using these things, and then you start to understand and be wiser about them. So imagine that's what a professional goes through. Imagine for the normal person in the streets where was trying to navigate all these things. So it's a tricky one, but what I'm just trying to point out is it's not as simple as teaching tax administration in life orientation class. It's way more costly than that, but I agree that we need to come up with a program that SARS helps a lot of individuals. In fact, me personally, as a practitioner, I've been developing some sort of a free program that can be accessed by anybody, and it just teaches them the basics of the Tax Administration Act that they need to know for their level of knowledge and what they need to engage with. So I'm for that, but I just had to clear that in terms of what this video is about, which is about small businesses being overtaxed, and that's a very, very different undertaking.
We'll continue to see talented entrepreneurs taking their ideas and capital to more business-friendly countries. They're going to leave South Africa. They're going to leave us a whole lot poorer. The numbers don't lie. South African small businesses are overtaxed, they're overregulated, and they're underappreciated. It's time for change before it's too late. Before no one is even incentivized to start anything in Mzansi. Thank you for watching this video up until this point. I hope it was just as interesting for you to watch as it was for us to make for you. Check out one of these other videos and hopefully they'll be just as interesting.
No, thank you, Zimasa. Once again, great video. Please like and subscribe to his channel, and also like and subscribe to this video, Bright Planning, because I do this type of video, talk about business stuff and all tech and relative relevant stuff. But anyways, yeah guys, I really appreciate this video. Anything to talk about small businesses, taxation, and business management is something that I truly enjoy, and especially in this sort of informal or semi-formal way, whereby we get to talk about, important stuff and reference the things that are coming from business cases and experiences, and share them in platforms such as these in order to help those that are in these situations or still learning and about to get into these situations. So yeah guys, yeah, the simple answer that I want to give this to answer his question, are small businesses overtaxed, or his statement, for me it's the simple answer is yes, but the complicated answer is no. The simple answer being that I go back to how I started this video. Are What are small businesses? A small business is a business that makes up to 25 million rands per year. Many of you, 1% of you, are going to be in that category where you actually reach the top of the threshold, where you're actually making 25 million. And I say 1% because the number is extremely small. And 80% of you would be under the threshold whereby you make 3 million and downwards per year. Now, the business reality for a person that makes upwards of 25 million per year and the one that makes 3 million down, it's vastly different. That's why in the example that he uses, he had to get that median example, which averages the impact, meaning that a business that makes about 11 million rands per year, that is a business that's doing extremely well for the perspectives of many small business owners. And many of them would like to have the problem that he has mentioned. And at the end of the day, what this tells you is that the government, when it comes to the businesses that are making lesser, there's many incentives that help them to not pay the taxes that are exorbitant. In fact, most of them will end up paying zero taxes. There's what we call a small business corporation tax. Now, this is a special purpose vehicle that has been set up for small business owners who don't own more than one business. If they do own a second business, then the net asset value of their business must not be higher than 5,000 rands. And that type of client will receive enormous income tax discounts. And it's very important to specify that I'm talking about income tax. Now, you still have the other tax types, your pay as you earn and value added tax. I mentioned during this video, there is an incentive for pay as you earn, which this one goes out to every business level, large, small, and alike. You are able to claim employee tax incentive. The only drawback here is the qualification criteria. If you are a business that's not operating in a special economic zone, you're just operating in a normal business district, your there's higher qualification criteria, and you're only allowed to employ people that are of a certain age. When they get to the age of 30 upwards, they don't qualify, and therefore that tax incentive falls away. This tax incentive is very powerful when applied correctly, and you can get between 50% or up to 50% of your payroll back in cash per month. So that is a truly big incentive. But the problem, as I mentioned during the video, is that the administration of this incentive is truly difficult and notoriously unrealistic to a certain sense. But it is there, it does exist, and it's possible to get cash back for employing people or the right type of people into your business. And then there's VAT. With VAT, unfortunately, there's no incentive. With VAT, it's very, very important for you to have a tax consultant who is knowledgeable about the VAT Act as well as the Income Tax Act or the Tax Administration Act in terms of operating and knowing what type of items or transactions are VAT taxable, VAT exempt, zero rated, and so on. In the example, it wasn't too clear, but I would like to believe that he illustrated an amount of VAT, which is not the complete story. I would believe there was a VAT output amount, meaning that whatever income that you made, you apply the VAT rate on. Now, when you submit, you don't typically submit. In fact, practically, you don't submit only the VAT output. You need to also submit the VAT input. Now, the VAT input is the cost of sales, your fixed costs that qualify, your variable costs that qualify, and at the end of the day, you have your net VAT payable slash refundable, and that's ultimately what you submit to SARS. So that whole VAT amount that you put there, that's not the exact amount that you're actually going to be VAT slash taxed at. It's going to be the beginning, then you can claim off it. And often, when I explain to my clients, if you're making a profit, you will pay VAT. If you're making a loss, you will be refunded VAT. That's just how it is. So I hope you guys can understand why I said the easy answer is yes, the complicated answer is no. Meaning that there are incentives whereby professionals are there to do their job and help you as a business owner to achieve the necessary VAT or tax compliance so that you can operate your business and grow successfully. Once again, it comes down to value add, and that's why I'm making this video, to really just shine a light on that. Because I mean, Zamisa, very, very great job that he does. But I just wanted to add my perspective as a business accountant and tax professional to this video, and hopefully it's a more enriching experience. But yeah, guys, check out the original video once again. Really appreciate you guys being on this video, and I hope you learned something. See you on the next one. Bye.